It's about that time of day again. My name is Joseph. Monday evening, August 27th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with oil, crude is bullish with a spike and range pattern tonight. So my goal is to get long below the range low, and I got my eyes on that two-try rule, waiting for those buyers, right, coming in tomorrow morning. The S&P is bullish with a spike and channel pattern tonight. That tells me to look for buying opportunities using a deep pullback into the battle zone tomorrow morning. The Nasdaq is also bullish. Nasdaq a little bit different than the S&P counterpart. Nasdaq has a spike and range pattern tonight, and of course that tells me to look for buying opportunities using a successful breakout pullback to the highs, or I'm always looking for that two-try failure below the lows on the Nasdaq for tomorrow. Gold is bullish with a possible short-term trading range, so I'm waiting to buy the low using a seller failure. Or I'm also watching for a successful breakout pullback to new highs on the gold tomorrow. Got a very interesting chart to look at here in just a moment on the yellow metal, so stay tuned on that in tonight's newsletter. Also, euro is bullish with strong spike higher, so I'm looking for buying opportunities after a two-legged pullback tomorrow morning. Boy, do I have a great newsletter in store for you guys and gals tonight. We got plenty of big moves on today's charts. We got some big news for tomorrow as well. And we got a real holiday shortened week in front of us that's going to be front loaded. So we're really looking forward to some great opportunities here Tuesday, Wednesday, Thursday this week. I'm going to put the whole plan together here for you guys in just a few moments. But before we jump into those charts, I got to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out right here on my blog at sidewaysmarkets.com. I'll leave a link in the description of this video. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. That's right, upper left-hand corner here on the blog, I'll put all the links in the description of this video. Give me your name, your email address, and I'll send you an email every time I publish something new. If you're hanging out on social, Stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, follow me on social for stuff you won't see anywhere else on my other different channels. Don't forget all those charts for tonight. That's right, all the charts from tonight's video. You can have them ready on your computer for tomorrow's trading session. Grab those charts and be ready for tomorrow. And then speaking of tomorrow, what are you waiting for? Grab that free pass. If you're not a member here at School of Trade, I've got a free pass for you to come out and join me as a guest at the trade room this week. Grab that free pass, and I'll see you in the trade room. Any questions? Don't forget, you can always call, email, drop me a comment, right, or hit me up on live support on the right-hand side of our website. All right, guys, looking forward to another great newsletter in store for you guys and gals tonight. Got a big week here ahead of us. Now, of course, getting a quick layout here, right? First of all, we are going into the last few drops of the month of August. What does that tell us? First of all, as we get later in the month, what do we expect? Volatility increases, right? So we're expecting to see a kick up in volatility because usually volume will dry up a little bit as we go into the month. Lower volume, more volatility comes along with lower volume in most situations. And so expect to see that increase in volatility as we go into the end of the week. Now, speaking of the end of the week, this Friday, right? This Friday is the Friday before Labor Day. Next Monday, right? It's not in the month of August. It's going to be September 3rd. Right, that of course is going to be Labor Day, right? So Labor Day, September 3rd, that's the Monday following, right, this Friday, that's a holiday. And unless you're unfamiliar with this, this is the last drop of the month of, or last drop of the summertime season. And what that means to us is a lot of people going out of town, a lot of vacations being taken, last chance, right? Last chance to sit around the campfire, right, and sing songs, right, and enjoy the last few drops of summer. This is a big, big deal. It's a big upcoming holiday weekend. It's the, it starts off with Memorial Day. We go through the 4th of July, right, and in Independence Day, and then we finish up the holiday or finish up the summertime season with Labor Day. So this week, even though we're going into the end of the month, we're going to probably see this week front loaded, right? So Monday through Thursday are really going to be where you want to make your money this week. Friday it's completely a question mark. It could be a great day because we've got the end of the month, but it's probably going to be a relatively small window on Friday. So get to it early this week. That's the goal that's what I'm trying to communicate with you right now. Get to it early this week, because as we get later, not only will it become low volume and high volatility, but we also have to worry about that holiday weekend. And again, with Monday being a holiday, Friday is an easy day to be a half day, and I just don't want to rely on Friday being a full day of trading, right, to make my money this week. So Monday through Thursday, that's going to be our key. We're already through Monday already. So it's really just Tuesday, Wednesday, Thursday. We've got some good news coming out this week, right? We got some major news tomorrow around 10 o'clock, consumer confidence tomorrow at 10 o'clock. We got GDP, of course, always a big number on Wednesday. And then we got inflation numbers on Thursday. So tomorrow, right, zooming in now, again, Tuesday, Wednesday, Thursday, we really want to get at it here this week, because Friday's probably going to be about a half day if we're lucky. And then again, we'll go into that holiday weekend, take Monday off, and then we start into the month of September. And remember, guys, September is always going to be a great month to be a trader. September, October, November, December, January, February, March, April, all the way until the end of the first quarter of 2019. This is the sweet spot, right? This is what we all come out to practice for. This is the stuff that we sit through the summertime trading to get to. That fall season is right around the corner, and we can smell it as professional traders. So that's the story here for this week, right? Front load it, make that money early this week, right? Enjoy Friday's kind of a half day, and again, we'll have a holiday weekend coming around the corner here. As far as news tomorrow goes, we got 8:30 international trade. In my experience, that number isn't going to be a big market moving event. It's probably not going to be that big of a deal. There's more likelihood tomorrow morning that 9 o'clock to 10 o'clock, you got home prices, you've got consumer confidence. It's more likely tomorrow around that 9:30, 10 o'clock hours, probably where you're going to get, right, the most amount of bang, right, for the buck tomorrow morning. So it's not going to be imperative we're right at 8:30, but you want to be there early tomorrow, because remember, right, you want to have that market scenario all planned out by the time we get into that 9 o'clock, 9:30, 10 o'clock block, right, tomorrow morning. And then come back tomorrow night, and we'll talk more about the plan for Wednesday and Thursday's session as this week, right, develops. Looking good. Let's jump into our charts here now. So now that you know the kind of the lay of the land, right, let's think of some charts. Roll those sleeves up. I've got crude oil, S&P, Nasdaq, gold, euro. Let's start tonight on the black gold, the Texas T, right, the crude oil futures. Crude is bullish with a strong spike higher, a short-term spike in range, and a rising support trend line right on the chart this evening. Now, first of all, the strong spike higher, right? That's kind of the first big clue here. This strong spike higher happened on Friday morning, if you recall, right? Now, that strong spike higher from last Friday is a firm reminder. Whenever we see a strong move in one direction, what do we typically see? Two-legged pullback and a retest of that high. So we know there is a big bullseye up around that 69.31, right? We know there's a big bullseye up there around that 31 to 38 area, right? So we know that's where buyers are trying to go. However, right, we can't ignore this range that we saw today, right? Easy trading range. It's a bull move up into a range. Double tops, triple tops. Anytime I see a bull market with double tops or triple tops, I know it's a range-bound day. It's a bull bias into a trading range. There's two ways to trade this. One is a breakout pullback. The second is going to be a two-try failure. Okay, two-try failure. Now, at the same time, I can also see I'm drawing up this trend line here. That trend line, right, is also going to be in play. Lines up beautifully right at the low of that trading range. So put it all together. We get a strong move going higher. We know those buyers are trying to get back up to retest that high. But you can see they're struggling, right? We can easily see there's resistance here at that 68.91. So two ways to get long off this, because it is a bull market right now. The two ways I'm looking to buy this market, the most reliable one would be a two-try failure. We go lower, we let those sellers try to sell the pullback, and we ultimately look to buy into the failure of those sellers. I call this a two-try failure. Bears try once, bears try twice. I have some very simple rules that I use every day in our trade room to qualify those two-try rules, right? It's a two-try, seller failure. Anytime we see a trading range, we're always thinking, right, seller failure. So look for that buy, right, as those bears fail. Now, I don't want to chase after this, right? I don't want to chase after it. So another opportunity here would be drawing a channel line off that high, finding a new channel line off that low, and then looking to buy, right, the pullback from there. So now we have two options, right? One is a failure, two is the pullback. If we can get the pull back to the low of that range, those are our best two options for tomorrow. What about the market going higher, though? Right? What do we look for? What if the market keeps going higher? What if we don't get that pullback failure, right, into another pullback pattern? What if we don't get that pullback pattern? If we do see a strong move higher, I'm then looking for what I call the fake out, breakout, pullback. Now remember, this 91 level is a major level of resistance. I can use that resistance as support if I can get the moving average to clear above the high of that range. So step one, nice big strong break higher. Step two, two-legged pullback. I want to use that level of resistance now as support, and that will be what I call my version of a breakout pullback pattern. I call it a fake out breakout pullback pattern. And again, it's first things first, a strong move higher, followed by the moving average goes above that trading range high, two-legged pullback, right? And I want to use that prior resistance as support to be a buyer going back up to retest the high. So if we just end up sitting here right in the middle of that range, you just keep waiting, one try, two try, failure back up, or waiting, breakout, two-legged pullback, right, and buying that breakout. Again, get that moving average right up above that range high. How do we turn bearish here? Good question, right? How do we turn bearish? Always want to keep that on our radar. A bear market would require what we call a 1, 2, 3 reversal, right? A 1, 2, 3 reversal. It's just like the name suggests. 1, 2, 3. Now, to give you some kind of frame of reference on that, look back here. Here's a 1. Pulls back to the moving average. There's 2. The third component, though, is a strong move off the moving average, right? Look here. Look how they never had the guts, right, to take it lower. 1, 2, 3. What happened? This is a great example. You cannot just rely on a sharp pullback. Sharp pullbacks don't reverse the trend. Sharp pullbacks oftentimes lead to failures, right? And those failures lead to explosive moves back higher. So we get a strong move down, that's wonderful. Make sure we see that strong follow through. Once we see a strong follow through, then we can go out, find what I call a hidden channel, and we can then look for selling opportunities off the top, right, of that hidden channel. Okay, it's a very, very easy trade, but we have to wait for the market to reverse. So we've talked about a two-try failure off the low of that range, a fake out breakout pullback above that high, right? A 1, 2, 3 reversal with a hidden channel. Now, are you here for the first time today? Want to see more examples of those hidden channels, of those fake out breakout pullbacks? Want to learn more about this strategy and see hundreds of examples of all of these patterns I'm talking about? I hope you do, because it's going to dramatically impact, right, and benefit your trading career. And the best part is it's absolutely free. To make this easy for you to learn this strategy, I'm going to give you a free trading course in the upper right-hand corner. Not to worry, pause the video. I'll be here when you come back. I'll also link it right in the description of this YouTube video as well. So at any time you want to dig into that description, you can grab that link as well. Grab the free course, because not only will I teach you the patterns, but I'm going to show you literally hundreds of examples, right, of how these patterns look on real charts and real patterns we've seen so far this year. Priceless opportunity. So don't miss this opportunity here to grab that free course. Again, upper right-hand corner, or it's in the description. Let's keep going. How about some E-minis now? We get the S&P, and then we'll grab the Nasdaq. The S&P is bullish with a spike in channel pattern on the chart this evening. The strong spike higher confirms the buyers have all the momentum. Right, strong spike higher here confirms the buyers have all the momentum, but now we have a channel, right? And that channel tells me I want to buy the low of that channel. I can also take that channel and kind of create a wider channel with a midline, right? I call these hidden channels. You'll learn a bunch of these techniques in that free trading class, so make sure you grab that in the description here of the video tonight. And so bottom line is, we know we have a spike and channel. Spike and channels are pretty simple patterns. We see a strong spike up, a pullback, and a new higher high. We then draw that channel off the highs, and ultimately, your eyes on a spiking channel are buying the low of the channel, or look left, right, and find those prior swings, right? Those prior swings, and we wait for a deep pullback to buy the low of that channel. So when it comes to a spiking channels are pretty easy. They start with that strong spike. We then have a higher high, which tells me it's a channel and not a spike in range. You'll see what a spike in range looks like next on the Nasdaq. And then once we find that channel, then we know we want to buy the low of the channel, right? Or even better, buy below the low of that channel using those prior swings. So when I look back at my chart right now, it's pretty easy to see as I zoom in, right? We have that channel. I want to buy off that low. I'd like to buy the low of that channel, or even better, right, get this thing down below the low of that channel, right? So buying the low and buying below that low. So as far as buying the low goes, right, it'll probably look something like we saw right here. And this should be very familiar to you, because it's exactly we talked about buying the low on crude oil. We go below the moving average. The bears try to sell that pullback. That gives us an easy opportunity here now to be a buyer into their failure. So now imagine that we finish off that rotation back up. We go back to the low of that channel. Moving average comes over. Bears now are trying to reverse that trend, right? Like they always seem to do, right? Not sure who wants to be selling this market right now, but look for those bears to come in and try to send that market lower. That now tells us where their stops are. I can buy into those stops, right? That's my first opportunity there, right? A seller failure pattern. But then even better, why not go out and find a channel off those highs, off that low, and let's look to buy off the low of that channel as well. Now this pattern will also set up if we get a deep pullback, right? Deeper the better if you ask me. Nice big deep pullback. Buyers now are trying to buy that low. Meanwhile, sellers are going to try to reverse the trend, right? And they might be successful for all I know. All I know right now, though, is the buyers have momentum, and so I'll be a buyer until those bears can take it. If the bears can take it on 1, 2, 3 strength, right? That 1, 2, 3 reversal, and again, it's got to be strong on the downside, then we can go out and we can look for that sell off the top of that, right? Off the top of that channel. So it's all about making sure right now that we can get that strength going lower before we even consider, right, being a buyer in this market. Because remember, right, if we get a sell off of that moving average, that tells me exactly where those stops are, right? I can now look to buy into those stops. I can look to buy into those stops, and then again, don't chase after it. I'm going to look for that new higher high, find that new channel, bingo. Now let's look to buy the low of that channel, right? So we're looking for that 2-try failure, 1-try, 2-try. It's called a seller failure, right? 2-try failure into that bull pullback as we go. Deeper the better, right? 1-try, 2-try, strength into pullback, pullback back up to retest that high, right? 1-try, 2-try, strength, right? Don't chase after it though. Find that new channel, right? And buy that pullback. As long as we get a pullback, we're good to go. Now, what if we keep going higher here, right? What if we don't get a pullback, Joe? What if we keep going higher here? If we keep going higher here, right, and we ignore the top of this channel, we're going to then look like the euro, right? Strong move up, and we'll simply wait for failure, strength, pullback, back in, trap pattern, failure pattern, pullback pattern. Again, no matter whether we pull back now or we pull back later on in the session tomorrow, I'm still waiting to buy at support. Even if we see that strong push higher, I know it's always difficult to resist the temptation to chase the market higher, but I want to see it jump up, pull back for me, and always buying as price pulls back. Always buying right at support levels. Now, here's another scenario to consider, right? What if we bounce off this high, right? What if we bounce off that high? Then what? This becomes a range, right? What does a range tell us? Same thing. One try, two try, failure, strength into pullback, right? Pullback, back up to retest that high. Two try rules, failure patterns, strength patterns, pullback patterns. Again, grab that free course in the description or in the upper right hand corner, right, and learn this strategy and see hundreds of examples of those patterns. Very, very easy. So watch out if we go sideways here. Could easily go sideways. If we do see it go sideways, buy those failures, right? Buy those failures. One try, two try, and back up from there. And again, if we do see that strength, pull back strength, find that new channel. Don't chase after it, right? And sell the high of that, right? Sell the high of that channel. Nice and easy. So now as we go higher here, as the Asian markets open up, we're looking for that rotation back down so we can buy the low of that channel. Or does it jump higher here again? Fine by me. New strong move up, mark up those lows, trap, failure, strength, pull back, and back up to retest the high. Anytime we see a strong move in one direction, we expect to see a two-legged pullback and a retest the high. That's exactly what we're looking for here, right, on the S&P. How about some Nasdaq here tonight? The Nasdaq is bullish with a spike and range pattern, a measured move, and reversal line on the chart this evening. The spike in range tells me the bulls have control, and the best options will be buying low, right? Buying below that trading range here tomorrow morning, right? Strong spike up, double top in a bull market. That tells me now that is a trading range. It's a bull bias into a trading range. Now, we talked about this on oil, right? There are two basic ways to trade this. The most reliable way to do it is the one try, two try, buying off of that low. Again, one try, two try, and then you're buying into the failure of those sellers. The other option is going to be that strong breakout pullback pattern. What do we need here? We need to see what? Strength. How strong? Strong enough to get that moving average above that high. Then we look for that two-legged pullback, right, for that measured move target up around that big round number. Most important thing right now is that strong move into that trading range. I'm looking for ideally here a one try, two try. Again, you want to see that two try off the moving average. Failure, strength, pullback, back up to retest the high, right? You're buying that failure, you're buying that pullback. Again, you're buying low in this bull market. If we keep on going higher here, that moving average clears above that high, fine by me. Let's look for that two-legged pullback, right? Again, most important thing is two-legged pullback, right? Use that resistance now as support, and we're trying to finish off that measured move at that point, up that big round number at 7,600. If we sink back down into this range, just sit tight, wait for that two-try failure, right? And we're back up again. How does this market turn bearish tomorrow? How do we turn bearish? You know the two-try, right? 1, 2, 3 reversal. 1, 2, 3 breakout, right? This will be one of those rare occasions where we're looking for not only a 1, 2, 3 reversal, but also a 1, 2, 3 breakout. Now remember, in order for number 1 to be counted as number 1, it's got to go below the range, right? So if we get 1, 2, 3, that's not a 1, 2, 3. It's got to get below that range, because all that tells me is we got 1 now. Right? So if we get this market below that range, 1, 2, 3, again, 1, 2, 3. Remember, you got to remember, buyers are waiting down here below that range, right? So a 1, 2, 3 is only going to be seen as a 1 push lower. 2 pushes, and then buy back up, right? So it's got to be 1, 2, 3, right? 1, 2, 3. And again, it's got to pull back to the moving average, right? So strong move down, pull back to the moving average, strong move off the moving average. Think about the personality of the market going higher. We saw a strong move up, a pull back to the moving average, and a strong move off the moving average. You're going to have to see something very similar to that much strength, but to the downside, right? Strong move down, pull back, strong move through. Then we find that new channel. I don't want to chase after the move because you never know how far it will go, right? And look to sell off the high of that channel. That will allow you to structure, right, that entry a whole lot better. Where's our target? For the sellers, the target is back down to fill that gap, right, at 74.96.5. And then from there, we'll have to see where we go from there because we have a whole heck of a lot of space here, right, for those bears to really end up all the way back down around, what is that, 74.30 area down there, right? So, obviously it's a little too much to chew on right now, but if we can get that gap filled tomorrow from those sellers, right, if we take a nosedive, we get that gap filled, 1, 2, 3, get that new channel, sell that, right, sell that pullback, get that gap filled, then all of a sudden, right, the ballpark, right, the ball is back in the hands of the sellers, and we're looking for that move back down to retest even Friday's low. Again, right now, though, buying the low of that range, that's the plan. And then next up here on the gold tonight, gold is bullish with a possible channel, a possible trading range, a 2-try rule, and a reversal line on the chart this evening. The bulls have control. That's pretty much all we really know right now. We know for a fact the bulls have control, right? But the rest of it, though, is really still kind of up in the air, if you will, right? I can see the bulls are holding above last Friday's high, right? There's last Friday's high. You can see we're holding above that last Friday high. You can see we're bullish. There's no question about that. And you can also see the bears tried once and tried twice. So we know we're bullish. Even more importantly, we know the market's holding above a key level of support. We know the bears have tried twice to go lower, right? They tried once, they're trying twice. So we know the bears have tried. We know the buyers are winning the battle right now. But the problem is unlike all the other markets, we really don't have a lot of proof here yet. For example, we have a strong move higher here. But for right now, though, all I can really do is line up these two highs, right, and create that hidden channel. We're holding off that hidden channel low, trying to go higher. But I can't help but recognize where we finished up the day today. We finished right at that high. This could easily be a bull market that's settling into a trading range here right now. That wouldn't surprise me at all. If you watched gold today, gold had about 20 minutes of good price action. It was definitely a summertime session, right, for the gold traders, right? And of course, with the end of the month coming up, right, it's easy to see why this market might be walking on eggshells right now. So the bottom line is I don't think we have enough. If we had some more proof right now of this market running higher, I would say, oh, easy. This is a channel. We'll look to buy that pullback, right? And we'll buy the low of that channel. So if we can get some strength going higher here, perfect. We'll look at this now as a bull channel and look to buy the low of that channel. But what I'm worried is, like I mentioned, we closed right at that high. And so I'm staying patient right now because this could easily be a trading range. It's a bull bias with a range. If we do see a bull bias trading range here now, we start going sideways now, it's pretty simple, right? Same things we talked about before. 2-try rule, the failure back up, right? I want to see the bears try once. I want to see it try twice. It will literally look exactly like this, right? We'll see it go once. We'll see it go twice. We know where the stops are, and we can now look for that buy going back up, right, to retest that high. So looking for that buy after that 2-try rule, right, below the low of that, right, of that range. So really there are two options here. One option would be we continue going higher, and if we do, we're looking for that pullback, right, to be a buyer off the low. It'll probably look something like this. Letter W coming off that low, and then a pullback, right, off the moving average, right? So it'll be a 2-try, 1, 2, right, 2-try failure into a bull pullback, as we try to go higher here, right? And again, the key is we're probably going to end up back below that moving average. If we go back below that moving average, that's your trick, right? Look for those bears to try, look for their stops, buy into their stops. Don't chase after it as it goes higher. Wait to buy the pullback right after it pulls back off that new short-term high. That's the plan that goes higher here. If we pull back on this, I'm expecting this to be a range, 1 try, 2 try, and again, it looks just like that, right? Failure now, going back up right into that range. And then from there, right, maybe a breakout pullback, 2-legged pullback, again, use that prior resistance as support, where we can buy that breakout pullback. Now, what else might happen here? How do we reverse tomorrow? A reversal would be what? It'd be a 1, 2, 3, right? A strong move lower. Again, the key word here is strong. That leg lower needs to show strength. Basically, it needs to tell me that buyers have left the building. Buyers are walking away. If we can get that now we can fire up that reversal line. We can look for a sell off the top of that channel. We can look for a sell right off of that reversal line as well. And again, a lot of these markets had big moves on Friday, so we could easily turn into a real strong and pretty profitable bear run here. All that space from last Friday. So we're going to see what happens. Again, so we're bullish right now. Either we go up into a new bull channel, right? Either it's up into a new bull channel, right? Or it's sideways into a 1 try, 2 try, right? Or it's strength, pullback, strength, right? For that reversal. I love trading reversals, but I don't predict reversals. And if you want a great tutorial on the best way to trade reversals, it's all in that free trading course, right? Upper right-hand corner, grab that free class, dig into that description here on the YouTube video, grab that free class. You will not be disappointed, right, in that free class. Let's keep going here. Next up, and last but not least here, is that euro. Euro's a piece of cake. Euro's bullish with a strong bull spike, a pendulum swing, reversal line, and a support trend line on the chart this evening. The strong bull spike, as we always say in this newsletter, anytime we see a strong move in one direction, we expect to see a 2-legged pullback to support and a retest of that high. Right? Now, once they get back to that high, then do we break through it and turn into a spike in channel? Or do we bounce off of that high and create a trading range? Right? If it bounces off that high. But right now, though, all we know for sure is the bulls have control and a very strong move. It was relatively low volume if you watch that euro, right, in this morning's session. So strong move up, looking for that 2-legged pullback to support levels, right, for a retest of that high. Now, where could we find some support levels? Well, there's a prior swing, almost the second candlestick of the day today. That's going to be a level of support, right? That's wonderful. Also, too, if we go back a little bit, I can draw this trend line up off these lows, right? That's a support level as well. And, you know, I also wouldn't argue with you if you said, no, Joe, it's a spike in channel, spike up into channel. And you'll notice that lines up nicely, right, with that trend line already as well. So a lot of different ways to look at it. On top of that, right, knowing once again we have that strong spike higher, 2-legged pullback and a retest of the high. What else can we look for here? Well, you know me, I always like to use what I call the pendulum swing, right? You'll notice how the market started off going lower this morning. Take that move down and just flip it around, right? Double it up from there, right? I call that the pendulum swing, right? The pendulum swings down, the pendulum swings back up. So we have reason to believe that 17,300 and change up there is probably going to be, right, the final resting point for those bulls tomorrow morning. So we have support here. We have support here. This is a beautiful spot there, right around that 16,700. What would that look like, right, for these buyers to pull back? Couple different options. One would be if we jackknife lower, I can look for those seller failures, right? Bears come in. The bears will try to sell this market off the moving average. We look to buy into their stop losses, right? What we call that again? We call it a 2-try failure pattern. Now, as that market fails going lower, it'll jump higher, right? That'll jump higher. Don't chase after that. Find that new high. Find that new channel low and buy off of that channel. Okay, so again, it's a 2-try failure into a bull strength, into a bull pullback, right? one try, two try, failure, strength, pullback, back up we go. Remember that again, one try, two try, failure into strength, strength into pullback, right, and pullback, back up to retest the high. Say it over again, right? Two try, two try, failure, strength, pullback, back up. We do this every evening on this nightly newsletter, and the strategy works incredibly well. Now, what if we go sideways here? What would a sideways range look like? It'd be a strong move up, a pullback, and a double top, right? What if we double top here in the short term? Then we've got a trading range, right? What do we do with that range? Two try, failure, right? One try, two try. Again, one try, two try. We're buying now into that failure. And again, we're trying to incorporate reversal lines, trend lines. Wouldn't that be perfect, right? Wouldn't that be perfect? Another thing to keep in mind would be if we see a flag, right? Flagging down. In other words, you can draw a trend line coming down. If we get a trend line coming down, my plan is to use that trend line, right? Use that trend line now as a level of support. Right? Don't buy into it, get above it and use it as support, right? So we see that trend line coming down, that'll be an easy way, right, to buy that deep pullback. And again, we're trying to incorporate reversal line, trend line. We're trying to incorporate, right, as much as we can. You'll notice I don't care about Fibonacci pullbacks, right? Those are unreliable. If you want to use Fibonacci, you can incorporate it along with these reversal lines. I never trust Fibonacci levels on their own, right? And not even clusters of Fibonacci, right? I know that's very popular these days on YouTube, right? I like to incorporate, if you do want to use Fib levels, incorporate it with an actual price level on the chart that has previously been used. If you want my opinion, if you need Fibonacci to incorporate with everything else, why bother using Fibonacci, right? I don't believe you actually need Fib levels if you know what direction we're bullish, find support levels, and then buy off those levels of support. Now, again, we talked about if price goes double top here. What if we go higher here? If we go higher here now, find that new channel and buy the low of that channel, right? Don't forget those little traps, those deep pullbacks, right? And buy off the low. Spike and channel, right? If we go higher here. So again, the key is it's a strong bull market, whether or not we one try, two try, failure, strength, and pull back up, or if we chop, 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 breakout, pull back up, or if we double top into a range, one, two try, back up, right? Or if we keep on pushing here, find that new channel, right, and buying the low of that channel, right? That's always an option as well. How do we reverse? What does reversal look like? Reversal will be 1, 2, 3 reversal, right? Got to see a strong move lower. Again, market's bullish, start with a strong move lower, pull back to that moving average, off the moving average, strong move through, right? Strong move through. Find that new low, find that new high, bingo. Right? Looking to sell off the high of that channel. Where's my target? Target's back down to retest that low on the big round number of 16,000. All right, guys, don't forget, tomorrow morning, we open up our trade room, 8 o'clock Eastern time. Be there with me. My job is to help ordinary people become extraordinary traders, and I use a simple price action strategy that I've learned over the last 10 years, and I trade it every day in our trade room. If you want to learn more, grab that free trial on the homepage of the website. I'll put all the links in the description of the YouTube video. Grab our beginner, intermediate, or advanced classes if you're brand new or if you're a grizzled veteran. I got a place for you here at School of Trade. And don't forget, I'm always here standing by. Holler at me with live support on the right-hand side, or pick up the phone, right, and call that toll-free number, and I'll be here to answer the call and answer all your questions. As always, guys, it's such a pleasure to be here with you all. Don't forget, front load this week. Get at it early, because as we get later on this week, it's going to start slowing down and get more volatile. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye.